Hello team, welcome to another ATP Geopolitics video with myself, Jonathan M.S. Pearce. This is a UK economic update. I'm going to talk you through some data that's come out today, some very good news for the UK, certainly if taken at face value. We're going to look at what some of the naysayers say, some of the critics of the government say as well. So it's not just going to be a case of cheerleading for the UK government, but there's some very good economic data that has been released today. So I'm going to explain this to you. We're going to look at it and get some understanding of where the UK is at the moment. That's important to see whether the government that is running the country at the moment is going to get any plaudits for that, and whether that will turn up in the polls, whether they get any more popularity, because at the moment they're struggling with the narrative in the media. They're struggling to get the media on side and public perception on side on social media as well. This then can have a knock-on effect for anything else the government's trying to achieve, such as, say, with Ukraine, foreign policy, with domestic reforms, with education, whatever it may be. Obviously, it all depends on money. So we're going to look at what is going on with the economy at the moment. Before we do so, as ever, please remember to like, subscribe and share. I appreciate all of you who have already subscribed to the channel. Thank you very much. And for those who have yet to do so, please click on the bell icon and select all. Okay, let's get to the details. Let's look at a couple of the big headline claims from the government themselves and people associated with them or cheerleaders for them. Where would you look at that? Well done, Prime Minister Keir Starmer, Rachel Reeves, the Chancellor Exchequer, and all the Labour government. Okay, so that's a bit of a whoopee. Britain records the biggest budget surplus on record, or effectively since comparable records began in 1993. Tremendous economic news this morning, says Mike Katz. Record surplus in tax receipts, surge in retail sales, the FTSE up, so that's the stock market, the bond prices strengthening, lowering the cost of borrowing. We can stop paying for years of Tory failure and start growing our economy and public services. Labour's plan is working. Okay, so that's what they say, looking at the Office for National Statistics figures that are coming out. Then we have Keir Starmer, the Prime Minister, saying earlier today, tackling the cost of living is my government's #1 priority. National living wage and a pension triple lock increased from April. Rail fares frozen, extending free school meals, 5p fuel duty and capping bus fares at £3. Change does not happen overnight, but change is happening. So that's not talking about the main kind of data we're talking about today, but the idea is that, look, this is what we're doing. We're making these changes. It is having an effect. It doesn't happen overnight, but it is happening. Okay, so let's look at some of the headline data. A couple of big beats on UK economic data, says Simon French, who is the chief economist and head of research at, I don't know who this is, Pam Maria Liberum. Anyway, bumper January tax receipts. So getting in more money from taxing. Essentially, just let's do some really simplified thinking about this. So the government needs to raise money, and they've needed to raise money since taking over, saying there's a big black hole in the finances. They took over from the Conservative government after 14 years of Conservative rule, and they were claiming that there's a big black hole. We need to make the economy grow. We need to make the economy work in order for our plans to work. And for the economy to work, that also involves, taking in more money. And or how do you balance the book? So you can either cut costs or get higher revenue. So you can, if you're going to cut costs, then the problem is it's a bit like austerity after 2008 and the financial recession. Then the previous government really went hard on austerity, but the problem is you're not stimulating the economy to grow. You're not putting money in and watching that sort of grow and have that come to fruition, so you have a flourishing economy. You're always cutting, and then no one has any money. People aren't, you're not spending money on infrastructure projects. You're not spending money in local government, so you're not paying people more. Jobs are harder to come by. Fewer people have money, so they're not spending money, and that dampens the economy. So you try and grow the economy by cutting costs, you're going to actually end up dampening the economy. Although there is a call, obviously, to to cut expenditure. You don't. What you want to do is cut expenditure whilst growing the economy, and it's that balancing act. So how do you grow the economy, or how do you get more tax pounds in, tax dollars, tax euros? You can raise taxes, okay, or you can grow the economy so that there's more um, economic activity, and the more economic activity there is, more kind of expenditure, then the more tax revenue you're going to bring in. You don't have to raise taxes. In fact, you can argue that you lower taxes. By lowering taxes, you give more people money in their pockets and they go out and spend it, and that extra spending causes money multipliers. You're spending that money here, that gets spent there, that gets spent over there, and you are heating up the economy, and then you are getting the rewards of a higher tax revenue, even though you've lowered taxes. Problem is that's a form of trickle down economics, sort of. It's not necessarily trickle down economics if you cut taxes across the board, but quite often you see the cutting the taxes of rich people, like the big beautiful bill in the United States. And the idea is you cut the taxes for the rich and they go out and spend lots of money, and they're the ones that generate wealth and generate jobs and innovation, and they are the ones that employ people. This is sort of a mixture of these two ideas. Was tried out in Kansas in the Brownback, essentially, experiment, where they cut taxes and expected loads of corporate entities and whatnot to come from states outside of Kansas, seeing that there were lower taxes in Kansas, and then jump into Kansas, and then it generates lots of investment and income, and people go out and spend more money because they have lower taxes. And they tried that, and actually it failed. And what happened is they didn't get the tax revenue in, and actually people didn't really it didn't really incentivize people to come into the state, and they ended up getting lower tax revenues and they had to cut loads of services, and it was a bit of a disaster. So that was this idea of, it was one of the big tests of trickle down economics and lowering taxes to stimulate the economy. And so you probably need a whole suite of options or variables to play around with. But essentially, if you are going to raise tax in order to raise income, obviously the more you raise tax, the less money people have, and so that has a negative effect. So it's like that sweet spot of having the optimal amount of tax. And usually when you see governments, Osborne was the Chancellor of the Exchequer under David Cameron for the Conservative government, was famous for saying, look, we're cutting taxes. And he said, we cut a load of taxes over here, but actually they then added taxes on over here, because they realized that just by cutting taxes we're going to cut revenue, and we need revenue for government expenditure, and so on and so forth. So it's a real balancing act. It's spinning plates, it's balancing, it's tensions. If you're going to tax, do you tax the consumer and the voter, through council taxes or sales tax, or alcohol tax or car duties, or you can tax the individual consumer, or you can tax a corporation, and they either pass that on as an extra cost to the goods or services they produce or provide, and then that's passed on to the consumer, and or they can sink that and take it out of their profits, right? And so it becomes a tax on their profits. Or you can tax kind of the employment, right? So there are different ways of taxing a corporation or an employer or a business. One way is through raising taxes in the UK, something like national insurance contributions. So these are employment taxes that the employer also has to contribute to, and that goes towards things like the pension and stuff like that. And the reason I'm explaining this is because national insurance contributions were raised by the Chancellor of the Exchequer, Rachel Reeves, when she came in, controversially. And the problem is, so the flip side to what we're going to hear this morning now is that the UK government is taking in much more tax income at the moment. That's really good, and it's making the books look really good. But what that also does is, there's always two sides to every coin, is that small businesses are really suffering because actually their employment costs are going up. So it costs more to employ people. And if you're a small and medium-sized business, that really hurts, right? You don't have a lot of wiggle room. You're not like a massive multi-billion-dollar corporation. You are a smaller entity and you're struggling to employ people. And then you put a big cost on employment. And that really, I think, more proportionally affects smaller and medium-sized businesses. So the Labour government will need to come up with some kind of solution to the success of raising the taxes as they have. Okay, so anyway, bumper January tax receipts, a £30.4 billion current surplus. So wow, they have taken a tax surplus here, putting the year-to-date current deficit lower than the OBRs, the Office of Budget Responsibility. So the people that look at the budget and say whether you're, it's checks and balances from a kind of quasi-governmental organization. They look at this and say, good or bad, or we have these forecasts if you do this. So the deficit is lower than the November forecast to now, and retail sales were also up. So not only have you got tax revenue coming in, but you've got more things being sold in the shops. That's very important because online business is killing shops. And so retail sales to go up. I don't know how much is online, how much is offline, but there's going to be a challenge to, I think, retail sales, given that people just don't go to shops anymore so much. Month on month, 1.8% month on month, 4.5% year on year. So that's really good. The retail sales are looking much somewhat healthier, and tax revenue is up. This reinforces a recovery in economic momentum since the November budget. So November, it was, the budget was like, Rachel Reeves is doing bad stuff, it's going to hurt us, etc., etc. But actually, what's happened is it's outpaced the predictions, from the OBR. So you can see the OBR here in dotted green. That's the Office for Budget Responsibility, and actually, the situation is looking even better. But that is, that's a really good direction of travel for the government. This is a very interesting graph. I like this graph. There's lots to derive from it. Okay, so the green, this is essentially what is driving big UK public finances beat? Well, in aggregate, it's national insurance, like I just explained, one of the big three, raising an average of £17 billion a month. So the big three, VAT, that's a sales tax, that's 20% now on everything that's sold, with some exemptions like children's clothing and books and things like that. PAYE, pay as you earn, that's income tax. So when you are employed, you pay your income tax as you pay. So we don't have to fill out tax returns every year if you're employed. It's all done automatically. I think in the United States it's very different and somewhat more complicated. We have a PAYE system, which is very good. National insurance is your national insurance contribution. That will pay for things like, as I say, pension, and what else? I was looking at exactly what I don't know if I have that anymore. But anyway, the national insurance contributions will pay for certain things. Okay. Now, the purple lines is the amount of money on the right-hand side, I presume in billions of pounds. Yeah, monthly receipts in billions of pounds. So you're getting 17.5 billion in a month from VAT, 23 billion from income tax, 16.7 billion from national insurance contributions. And the green is the percentage year-on-year change. So there's a huge increase in CGT and SDLT. So that is capital gains tax, and SDLT, that is stamp duty, land tax. So if you are buying a house, you have a duty on the house buying, and you have land tax as well. So a percentage, really big increases in percentage of what they get, but actually not huge incomes for the government as a whole. So fairly big change in self-assessment. So that's tax not through the PAYE, but if you're self-employed, then you do your own tax, and income there has gone up percentage-wise quite a bit, and there's a fairly high amount of income from that. Big income from onshore corporation tax. So you're getting higher corporation taxes, and the percentage is changed. Okay, a percentage of income. has changed there, and that's quite a significant one. Um, we also have tobacco duty and alcohol duty going down percentage wise. They're not huge incomes, but tobacco, that's pretty significant because that was one of these funny taxes where you say smoking cost the National Health Service an awful lot of money, but actually they recoup that money from the taxes in tobacco. The problem is not the problem, but the higher you tax tobacco, the fewer people that smoke, and the less income you get. So then trying to pay for the people who have got lung cancer and stuff then becomes a little bit more difficult. But from a I guess national health point of view, fewer people seem to be smoking at the moment. I know that when I walk down the streets, very few people are now smoking. More people vaping. That's the whole other thing. But anyway, that's why you got percentage changes in alcohol. Yeah, younger people don't drink as much alcohol. When I was young, all you wanted to do was go out and get hammered, right? Because that's what young people did. Nowadays, they're existing online, and it's not such a big thing, and that's a positive thing. But it means that you got less alcohol duty. Fewer people going to the pubs. We stay at home more. We used to go to the pub all the time as part of the British culture. You got pubs closing left, right, and centre, and then people blaming the Labour government or previously the Conservative government, but actually I wouldn't blame any government particularly. Yeah, you can talk about, people say, oh, it's because you put too much tax on alcohol. It's not really, actually. It's because the culture's changed. People just don't go to the pub anymore in the UK compared to what they used to. And think of it, if you're British and you're watching this, how often do you go to the pub now compared to 30 years ago, 20 years ago, 15 years ago? And for me, it's far less than I ever used to. So, okay, so that's what's going on, but essentially, you've got some big percentage changes over here, but all of them are fairly decent percentage changes year on year. So when you've got these huge ones here with a fairly modest percentage change, actually that's significant. A fairly modest percentage change on a really big income is very significant. This one for national insurance, that's a big one. So you've got a very big percentage change in terms of 15% more coming in year on year in terms of national insurance, and that gives a massive income. So national insurance was a big thing she put up, and she's reaping the rewards of that. But of course, that's going to be also a tax somewhat on small and medium size, well, all businesses for sure. Okay, so capital gains tax up 42% year on year, but relatively small amount. Clear evidence that the budget-related speculation brought forward the sale of assets on rumours of changes to capital gains tax. So loads of people sold lots of stuff because they thought there was going to be a change to capital gains tax. And that's why there was more income there. Okay, so the Office for National Statistics has stated here in commenting on today's public sector finances. This is Grant Fitzner, chief economist. January, which is traditionally a strong month for self-assessed tax receipts, saw the highest surplus since monthly records began. So there you go. So basically, in UK. In the UK tax year, if you're self-assessed, so if you're self-employed, someone like myself, I have to fill out my tax. I don't do PAYE. I don't have an employer, so I don't pay tax through there. So I have to pay my own tax, and you basically have to pay it by January the 31st, right? So everyone pays their self-assessment in January effectively, and that's why January is a good month, but it still saw the highest surplus since monthly records began. Revenue was strongly up on the same time last year, while spending was a little changed due to lower debt interest payments. We're going to look at this, largely offsetting higher costs on public services and benefits. So revenue strongly up on the same last year, spending about the same. So spending hasn't really changed. So we're not cut spending, we're still spending as a government, as we've got to do all these services, and we've got the, we want to be ramping up defense, and that's a big question. Where's all our money for defense expenditure going to come from? Obviously helping out Ukraine and all that stuff as well, foreign diplomacy, and then the welfare state and education, NHS. But revenue was strongly up, so we're getting more tax revenue in. Across the first 10 months of the current financial year, borrowing is lower than the same period a year ago, and that's very important. We're going to look at borrowing a bit later. So Good News Friday continues. Flash PMIs. So what are PMIs? PMI is a purchasing managers index. So it's a key economic indicator based on monthly surveys of senior executives at companies in the manufacturing, services, and construction sectors. It acts as an early, near real-time indicator of economic health, tracking factors like new orders, production, employment, and supply deliveries. A reading above 50 indicates that the sector is expanding, while a reading below 50 indicates a contraction. Okay, so Good News Friday continues. Flash PMIs for the UK in February showing an ongoing rebound. So here's your 50 mark. So this is what you want. You want, if you're above 50, you're expanding. So what's expanding? Manufacturing is expanding. Services are expanding. Composite of all of these are expanding. Construction went down, even though we have a housing crisis and the government is trying to build 5 million new homes by the end of the parliament. Problem is that we don't have enough house buyers. Now, when we're in the EU, you used to be able to react to stuff like this by getting labor from other places in the EU. So when we had expansion of demand in construction, we would then go and get loads of Polish builders and builders from all throughout the EU. The problem is we can't react in the labor market very quickly anymore because there's no movement of labor. You have to get visas sorted out and all sorts of stuff like that, and they're capped in certain domains and whatnot. So the government says we want to build loads of stuff, and then the housing market, for example, goes brilliant. We want to build loads of stuff. The problem is we only have the same amount of builders we had yesterday. So how do we suddenly get an absolute ton more builders and bricklayers and chippies and whatnot to build all this stuff that you want? We can't react to that. And so that's been a real challenge for the government at the moment, as they want to meet supply with demand. Now, luckily, that is now going in the right direction. It's probably going to take some time to be able to get the supply of construction workers through into the system to meet demand. And obviously, you're going to have to think about planning, regulation, and stuff like that. But anyway, construction, that's a funky one at the moment. But in terms of manufacturing, it's really important, and services, really important. They are in growth by the looks of it. So that is excellent news. Now, retail sales trend continues to rise amid a proxy for consumer confidence. Overall, the trend since the election is up. So this is the election there in the red. That's blue of the Conservatives, and that was sort of going down and then was rebounding a little bit. It was going up for the UK, then went down around January last year, and then it's been going up really consistently since then. Rolling 3-month and monthly index for the quantity bought in all retailing, seasonally adjusted. Great Britain, January 2023 to January 2026. Point being that it's moving the right direction. Okay. Bloomberg then reports British firms boosted output at the fastest pace in almost 2 years, which is pretty incredible, right? So British firms boosted output at the fastest pace in almost 2 years. The report brings further signs of an encouraging start to the year in the UK economy, with a private sector recovery driven by Britain's services sector. So our services are doing well, but as we saw, manufacturing seems to be expanding too. Businesses increased the prices they charged at the fastest pace in 10 months. So that's inflationary, mainly driven by services providers, while employers cut jobs for the 17th month due to higher cost pressures. Okay, so there are some issues to look at here, which is cost cutting and trying to get as efficient as possible. And this has sort of come out both in the United States and in Britain, I think around the world, out of the pandemic, where everyone had to cut jobs because, no one could go to work. So you were furloughed, but essentially then companies, you were either furloughed or you lost your job. But companies realized that they could actually operate without having these people at work. And so then they didn't take on all the employment they cut during the pandemic, and then they became leaner, which is good, right? More efficient. But the problem is, from a macroeconomic point of view, you got fewer people employed, and these big corporations are learning to be much leaner. People working from home, that can sometimes add efficiencies and whatnot, or whatever it is, cutting jobs in general. And so when you've got AI then coming in as well, there's going to be a further challenge to not just the UK, every country on earth, because AI is going to be replacing a good deal of jobs. And so how does that work? So yeah, prices are going up. People seem to be buying more, making more, but actually, employers seem to be cutting jobs as well. But that said, there is a slight increase in job vacancies, which is good, because it means that there are more jobs there for people to get, which means employment uh, is going to go down. Unemployment, sorry, is going to go down. So anyway, British firms boosted output at the fastest pace in 2 years, according to closely watched surveys suggesting a bounce back at the start of 2026 is gaining ground. S&P Global's Purchasing Managers Index, we talked about that, PMI, rose 53.9, up from 53.7 in January, and above the 53.2 expected by economists. So outdoing economists' projections. According to flash estimates published on Friday, the gauge reached its highest level since April 2024. And again, further signs of an encouraging start to the year for the UK economy. Figures point to a 0.3% rise in GDP in the first quarter, he added. So that would be good, okay, or better than 0.1% we had previously. The pound edged 0.1% higher versus the dollar, following the data, which came after stronger than expected readings on retail sales and government borrowing, which we're going to get to. Gilts were mixed, with a 2-year yield among the more okay, we're going to come to gilts in a little bit, actually. Private sector recovery continues to be driven by Britain's powerhouse services sector. Manufacturing activity is also picking up pace, with factories reporting the strongest rise in new export orders in over 4 years, thanks to the rising demand from the US, Europe, and Asia. However, firms continue to struggle with higher cost pressures from wages, that's the national insurance going up, raw materials and technology. Employers cut jobs for the 17th month, and some said tech investments had allowed them to avoid hiring. Businesses increased the prices they charged at the fastest pace. So there is inflationary pressure in that. Okay, so just talking about the PMIs, we have good indicators there. Key drivers including rising exports and domestic demand, though employment continued to fall, as mentioned. Composite output index, as we saw, from services plus manufacturing, rose. That shows faster expansion. Manufacturing with rose with output for the 4th consecutive month. Services eased slightly, but it's about the same, indicates robust growth. Growth drivers: improved export sales, fastest in 4.5 years for manufacturers, stronger domestic demand, and customer restocking. Employment and costs. Despite output growth, employment fell for the 17th consecutive month, as we've heard, due to cost cutting with and increased productivity initiatives. Input costs remain high, and output price inflation has accelerated. So there are challenges to all of these. As ever, the better you do as an economy, the prices are going to go up. It's just people have more money, and there's always a cloud to every silver lining, and maybe a silver lining to many clouds as well. Okay, retail sales data was strongly influenced in January by unprecedented levels of demand amongst online jewelers. And I think that's to do with the price of gold. Price of gold has gone insane. So people have been buying gold and jewelry that has a set price that was already priced up in online retailers. Buy a load of jewelry, and then I guess you can sell it for gold and maybe make a profit. I don't know. But anyway, the price of gold has affected online gold selling. And also, what else? Other thing that's driven this? It was something like sort of fitness drugs or whatever, or supplements, or I can't remember. There was another thing that really was driving this as well. But anyway, good news there, and it's also worth checking this out. So both main fiscal aggregates now trending better, having deteriorated sharply since the 2024 general election. So you've had some total borrowing going up, of which current borrowing here. But what's interesting about borrowing is that that's been going down, and Britain is in an interesting position where we have one of the lowest, as far as I remember, one of the lowest consumer borrowing in Europe. What that generally means is that across the country in the UK, not many people are borrowing as much as they used to, right? And you may think, and that is good, right? So we don't have as much debt. What that then also means is if you're looking forward from a macroeconomic point of view, is that we've got more space, we've got more headroom to borrow as individuals, which means that we can afford to spend more. And what we're also seeing is a base rate for interest rates coming down. So not only is it going to be cheaper for us to borrow individually, but actually not many of us have as much debt as we used to have, and so we can just go out and spank money, right? If we so desired. What that means is that there is that potential for the UK to grow more, or at least to spend more, right? Which is good for the economy, good for tax income, good for money multiplying and heating up the economy. We have much more scope to borrow than other European nations who already have a higher level of borrowing already, right? So that is a good aspect of where we're at. So Rachel Reeves, the Chancellor, is on course to secure a windfall from the falling cost of the UK's debt interest payments for the first time since she became Chancellor of the Exchequer. So not only are interest rates falling, the base level rate falling, which means it's cheaper to borrow, but also for the government it's cheaper to borrow, and a lot of that is wrapped up in these yields from gilts and bonds, right? Government or treasuries as they are. So UK's Reeves is set to get a boost from falling debt interest. Rachel Reeves is on course to secure a windfall from the falling cost of the UK's debt interest payments for the first time since she became Chancellor in July 2024. At next month's spring statement, Reeves is likely to bank on extra £1.5 billion in lower borrowing costs compared to her budget last November, according to calculations by Bloomberg Economics. Yields on 10-year gilts have fallen 25 basis points over that time. At every one of the Chancellor's previous fiscal events, November's budget, the March spring statement, and her inaugural budget in October 2024, higher debt interest has undermined her plans. At each event, she has had to either raise taxes or cut expenditure in order to bridge the shortfall and satisfy her main fiscal rule, which requires taxes to cover day-to-day spending by 2029 to 30. So you've got a nice surplus now, so that's good news. And all of this good news should lower the yields and lower the cost of borrowing. So basically, if the economy looks dodgy, then the cost of borrowing goes up, and then it's kind of compounds your issues because then things become more expensive, and then you can't spend on this, and then that affects your economy. So what you want to get into, as I'm no expert, but I assume it's a virtuous cycle rather than a vicious cycle, where borrowing is cheaper, and then you can spend more, and then you can generate more, and that makes borrowing cheaper, and so on and so forth. And that's really good news that because the bond market was something that was, as it mentions here, holding her back. So at each event, she has had to either raise taxes or cut spending to bridge that shortfall in the fact that, debt, you're servicing your debt is really expensive. Now, although debt interest is likely to be a tailwind for once, other changes in the Office for Budget Responsibilities forecast may eat into the Chancellor's overall headroom. And this is interesting. And we're going to look at this in a little bit of detail, although not exactly next. Net migration has been lower than expected. So the problem for people who, and I'm ambivalent on immigration, I know there are social cohesion issues with immigration and, impact on services, but also migrants are, generally speaking, net contributors. Now, despite what you may be told by Reform UK or the Daily Express or the Daily Mail, that all migrants are just they are pulling on the welfare state and they cost us all of this and they're all skimping on welfare. Generally, they're not. So generally, they're younger people. Younger people are much more likely to do these crossings across the across either to be illegal immigrants, you're going to be younger, but to be legal economic migrants, you're invariably going to be coming to the UK to try and get a job as a doctor or as in a trade that's needed or whatever, right? So whether you're illegal or legal, you're generally going to end up being a net contributor to the economy, and that's what the stats show us, even though that's not what people like to hear. So net, and what that then it means, if you cut migration, so if Reform got in, right, and they were going to do, and this is a problem with ICE and Trump's migration policies in the US, that if you're going to get rid of 13 million people from the labor force, not only does that have an inflationary impact in saying that there are fewer people now working. So in order to attract people into these low skilled jobs or this particular job, there are fewer people in the pool. So we have to attract them by putting up the wages. That has an inflationary impact, right? So getting rid of workers has an inflationary impact. But also these workers are net contributors. So each person you get rid of is actually contributing more to tax income than they're taking from the government, right? And if you get rid of 13 million net contributors, not only will it be inflationary, but you're suddenly cutting a whole bunch of income from government, right? And that hurts. So here, net migration has been much lower than expected because the Labour government has done a good job, and the Conservatives were starting eventually to do a better job at curtailing migration, right? And many people say, brilliant stuff, want to stop so many migrants coming into the country. But each 100,000 migrants not coming into the country, if they are predicted to come into the country, affects something like, what is it, 7 billion in income? I forget what the figures are, but essentially, like if you're supposed to have 100,000 people, or you predicted 100,000 people to come in, and then you're like, okay, we've got 100,000 people coming in, they are generally going to be net contributors, and we would expect to make 7 billion pounds of income off them coming into the country. Then when they don't come into the country, you're like, oh bugger, we had budgeted for 7 billion pounds for these guys coming into the country, and now we've done such a good job of stopping immigration, we now have less money than we thought. So this is what the Bloomberg article says: 100,000 downward revision. So it's a revision. So we thought they're coming in and we revised it downwards. 100,000 people fewer, a current assumption that 340,000 more people will arrive in the UK each year than emigrate. That would knock. So 100,000 is actually 9 billion. So 100,000 downward revision to the current assumption would knock about 9 billion pounds off a fiscal buffer by the end of the parliament. So that 100,000 people costs the government 9 billion in income. So when you wonder why the Republican Party and the Democrats over successive governments in the United States have not tackled immigration in the way that people have wanted them to, because you look around, you're like, too many foreigners in the country. Yeah, and the government goes, I understand you there. However, when we look at the figures, it turns out that each 100,000 people brings us 9 billion pounds or 9 billion to $15 billion of income. So that's why we're not sending all the people back. And you have to wait till you have a really ideologically fervent government to come in. Like in America, it's Stephen Miller, who says, I don't really give a damn what the effect is on the budget. We're going to get rid of 15 million foreigners. Then it's like, okay, get rid of them. It'll be inflationary and your tax income's going to be screwed, but don't really care because we've got fewer Mexicans here or fewer South Americans or whatever it is, right? But you need to understand that. So part of the issue for the Labour government is the better they do on curtailing immigration, the more impact then that will have on their predicted budgets, right? So yeah, here's some example. Financial Times: post-Brexit skilled work migrants will give a 47 billion pound fiscal boost over time. And it depends what immigration you're talking about, whether a skilled labor force or health and care visas or even lower skilled workers than that. You know, your contribution to the economy is going to be dependent on what kind of worker you are. But you know, how much do immigrants contribute to the UK economy? Myths, facts, and real impacts. This is in Parliament News. Just up here. Tax contributions. The immigrants also play a significant role by contributing to the tax base in the UK. National insurance contributions and income tax, we talked about that. VATs, just when you spend on stuff that's taxed. Immigrants contribute more in taxes than the government services they receive. So that is the myth. People are like, oh, these immigrants come to a country. Yeah, they're younger. They're actually far less likely to pull on the NHS. Older people with ailments pull on the NHS. like far more than young people. And it turns out that they don't go to the hospital as much. And so they don't draw from society. And if they're working, on the one hand, you can't say immigrants are coming here and they're nicking our jobs and then say they're pulling on welfare, because they're not pulling on welfare because they have a job, right? So which one is it? Is it if they're drawing on welfare, then okay, fair enough. But actually, the statistics show that they come here, they get jobs, and you can complain they're nicking your jobs, but they're not being net extractors from the economy. They're being net contributors, right? And I'm not making an argument for or against immigration here, but what I'm trying to do is explain the impact on immigration, the impact immigration has on budgets and income. So they have a positive net fiscal effect, according to research. Research has established that the annual contributions of both EU and non-EU immigrants amount to tens of billions of pounds, which are used to fund the provisions of services such as education, healthcare, and infrastructure. They are essentially net contributors. Okay, that's a point. So if you are going to get rid of immigrants or cut down immigrants, rather than get rid of them, cut down immigrants coming into the country, that will have a fiscal effect. Okay, so Tris Osborne, an MP here, says, despite those claiming brink of recession and absurd commentary on the International Monetary Fund bailouts we've seen for 12 months, this claim that we're all going to hell in a handcart and the IMF is going to have to bail us out. Gilt yields are falling, and they're now below Sunak periods in 2023. So the gilt yields, which means the amount of money, the amount of interest on government bonds that you take out, that is borrowing, if you like, is going down. And as you can see from the right-hand side of the graph here, and that is good. So you had they went up as everyone was worried about the November budget, and it was all, oh my goodness, the government doesn't know what it's doing, and then everything stabilized, and it turns out they might know what they're doing. At least the figures are looking good at the moment. Callum Pickering here says it's another good day for gilts this week on the back of the outsized January surplus for public finances. Wages, inflation, and finances all supporting gilts now. So all of these good indicators mean that gilts come down. As yields come down, it will see a big headwind to economic performance. So lots to be positive about. Darren Jones, another MP, says national borrowing is falling faster than expected. So this is the Institute for Fiscal Studies saying today's public finance figures show that borrowing is falling, and falling even faster than the forecast back in November. So the green here is this year's borrowing, which is lower than last year's borrowing, and it's falling. So this is important. The Chancellor's plan for meeting her fiscal rules is predicated on borrowing falling significantly this year and next. This needs to happen for Rachel Reeves' plan to work, right? So inflation is down, interest rates are falling, real wages are improving, and the UK is the fastest growing of the wealthiest countries in Europe. Step by step, we're getting our economy back on track. So that's a very positive interpretation. Remember, I'm going to be showing you some negative claims about this as well. So Dan Tomlinson, another MP, says borrowing this year is forecast to be lower than in any year since the pandemic, and we are on track to more than halve borrowing by the end of the decade. Conservatives sounding off today about sound public finances should remember their public finance legacy that they gifted to us. We now have lowest interest rates ever, and they had the lowest interest rates ever, and they still managed to drive the debt up and drive our investment down. Jokers. So lots of Conservatives coming out and slagging off the positive figures, or saying that it's not anything to do with Labour, it's more to do with X, Y, Z. And here we have the fight back from people involved with the government. This week it was announced, says Trevor McArdle, that inflation fell from 3.4% to 3%. This means that the base rate will probably be reduced again from the current level. So this is the central banks, Bank of England. Their base rate for borrowing, it will probably come down to 3.75%. So that will affect mortgages, it will affect borrowing in general, loans that you get out. It will be cheaper to borrow, which means you're more likely to borrow, which means you're more likely to spend. Okay, so this is looking better. When Labour took office, it was 5.25%. So it's gone from 5.25% as a base rate, and it was looking fairly dodgy, and it's now come down to 3.75%. That is excellent. I'm just really annoyed that I had to renew my mortgage at a time when it was near the top. NHS waiting lists are down and continue to fall. Growth is up in 2025, but the media is shouting, Chagos, you're surrendering Chagos. Hang on, this is what's going on. So it's interesting to note that NHS waiting lists are down 330,000 since July 2024. So that is very important. That's one of the big things, big indicators of a successful government. They're always talking about bringing waiting lists down, because otherwise it becomes a stick with which you can hit the NHS, and then you try and privatize because the NHS isn't working because too many people are waiting too long for their. There's still too many, by the way, and the waiting list is still too high, but it is coming down. That's exactly what they were planning. And the resolution, this is Fraser Nelson, who writes for The Spectator, so he's a super conservative. The Resolution Foundation has become the latest to forecast net migration, which has been collapsing, and it expects to go 100,000 lower than the OBR thought. So this is a problem, that if 100,000 extra people are not, or 100,000 fewer people are going to come to the UK than were thought by the OBR, then that's going to cost the range of. But he's not talking about the financial implications. He's just saying, this is good from I'm anti-immigration, and this is good. The range of plausible 2026 scenarios is huge. To hit tens of thousands or even Sweden-style net zero is perfectly achievable. So you could have a situation where our net migration is in either in the tens of thousands or zero. If it goes crazy, but also it could start going up again, as some predictions are predicting, right? Anyway, so many people are rightfully associated with the government are complaining that this isn't getting through into the media spaces. Have you heard this on the radio if you're in the UK? Have you heard this on TV news? And how much have you heard talk about it? Like, I've gone into quite some detail. There are some really good indicators, right? If you are trying to sell the government's successes. So if you're a spin doctor for the government, you should be shouting about this. How much is getting through? Deborah Meaden, who is famous because she is on Dragon's Den as an investor, which is called the Shark Tank in America. It's that show where people go and say they propose some kind of business thing, and then you get these dragons who will then invest in them or not, depending on how good their proposal was. Deborah Meaden responds to someone saying, so it appears that Rachel Reeves does know what she's doing after all. The UK government finances better than expected in January. Deborah Meaden say, and this is why in an age where we expect everything to happen immediately, there are some things that just need more time, and switching horses before the plan bakes gives you the worst of all worlds. There will be blips, always are, but how about we stop wishing the worst on ourselves? Just be a bit more positive, and let's get behind the success of our country. And we don't need to change the Chancellor like this because they haven't achieved something within. Like, I get really annoyed that I don't have my internet after 30 seconds of not having the internet. If Amazon doesn't deliver me something within 5 seconds, I start punching the wall, right? So, how angry do people get that the economy doesn't turn around within 2 weeks? Well, everyone has unrealistic expectations. Here, another source says, not even the top story on the BBC yet. Had this been a deficit, it would have been wall-to-wall coverage. The UK government records a $30 billion a pound surplus in January, and the best since records began in 1993. The best surplus, and yet not even the top story in the BBC. Barely mentioned at all. Now, remember, going back to October, the UK is supposed to be predicted to be, by the IMF, the second fastest growing G7 economy. So, things could be good for the UK government. Okay, let's now tone it down a bit and say, what's wrong with all of what I've just said? Simon French, who I've already quoted, says, who's very positive and bullish, says, okay, but a few caveats, or this is where I think it's going. My take on where this leaves the UK economy ahead of the spring forecast: there is a cyclical upswing underway, driven by a hiatus in budget-related rumours, ongoing moderation in interest rates and inflation, and some of the public spending pledges translating to activity. But huge issues. So he's saying, all right, that's all the good things, right? But huge issues remain, including the clear policy error that has been cumulative labour market policy that has hit youth employment. So is that national insurance contributions being put up? So higher taxes on employing people. So people don't want to employ people, and minimum wage being raised or living wage being raised maybe is a disincentive to employ people. But I think youth employment is mainly hit actually by AI. So there are some rumors that 1 in 3 graduate jobs have disappeared because of AI. So, and I don't think that's a Labour thing. I think it's a universal international challenge for all economies. But anyway, youth employment. The ongoing frictions to growth from the highest energy costs in the developed world. Now, people on the right, like Reform and Conservatives, keep saying that this is due to net zero, and it's not. It's to do with the way, essentially, that we buy and auction our gas. There's a really good video on TLDR that explains, I think it's titled something like The Energy Crisis. We do have really high energy costs, but it's not to do with net zero by and large. It's to do with the annoying way that we price our energy. That needs to be reformed. So just be warned, you will often hear this as an excuse to get rid of environmental regulation. But anyway, we do have high energy costs, and that does need to be sorted out. It's the highest in the developed world, and the elevated cost of the UK risk capital, alongside the void in how high, so this is a worry for me, in how higher defence spending can be financed with the tax burden already at an 80-year high. So Rachel Reeves really can't raise taxes anymore. It would be deeply unpopular, and the tax burden is already very, very high. Although some argue that actually, our welfare expenditure is lower than many across Europe, and we're all over the place with regard to different metrics compared to, say, Europe and comparable economies. But anyway, UK debt interest rates at the highest in the G7. So we do still have very high debt interest rates, but they're going in the right direction at the moment, as mentioned, with the gilt yields and so on and so forth. So be warned, how are we going to afford lots of extra defence expenditure to get to 3% of GDP by the end of the parliament, if that's genuinely what is intended? Right. Andrew Neil, hyper-conservative, Brexiteer, former BBC presenter who it was like super conservative when he is just super, super conservative. To Rachel Reeves, who said, inflation down, interest rates down, borrowing down, retail sales up, UK fastest growing G7 economy. There's more to do, but our economic plan is the right one. So that's coming from the Chancellor of Exchequer. Andrew Neil goes. Some corrections. You inherited 2% inflation. It doubled in 12 months after you became Chancellor. It is still 50% above the rate you inherited and 50% above target. It should fall to target 2% this summer. So 2 years to get back to where you started. What's to boast about that? Fair enough, but 2% interest rates are insanely low, like record low interest rates we had due to pandemic, global stuff, wanting to get people to spend, so I think that's fairly unfair for him to say that, by the way. If you compare interest rates now to, say, the 1980s, just two completely different universes. Interest rates have been falling everywhere, he says. UK cuts, which you don't control, have been fewer and smaller because of your inflation record. So this is weird, because he's then said, actually, interest rates should be lower, and attacking her for them being higher than they should be. But then he says, UK cuts, which you don't control. So he said they should be lower, but you don't control them. Okay, so that's weird. Because of your inflation record, we still have the highest interest rate in the G7. The Bank of England has made some cuts for the simple reason the economy is flat on its back. Well done. Obviously being sarcastic. Borrowing is slowly falling from a very high base. Almost 6 years after the pandemic-induced recession, we're still borrowing around 4% GDP, and borrowing costs are the highest in the G7. Retail sales are up in recent months. We'll see how long that's sustained, but the hospitality and construction industries are in crisis. Plus, our massive services sector is stagnant. Actually, it's not stagnant. Services is growing, as according to the PMIs at least, and that's a trend that's been above 50. So I think he's just flat out wrong there. UK fastest G7 economy, that's simply a barefaced lie. We grew by 0.1% in quarter 3, 2025. It depends how you take it, because if you take it at the quarter 4, then it doesn't look as good. But if you take it over the whole of 2025, then it does look good, or better. So it really does depend how you slice and dice the data. So that's somewhat understandable. Anyway, that's his other side of the coin. What I want to then just finally talk about at the very end here is like Brexit. So if we're doing quite well, Could we have done a lot better if we were in the EU? What does that mean about us wanting to join the EU? And is that something we need to be talking about in this kind of conversation? James McCleary says, well, first of all, ITV Politics reports that over 80% of 16 to 24-year-olds would vote to rejoin the EU, according to an ITV poll. So young people, I talked about this yesterday, like 5 million people have died and they overwhelmingly voted to leave Brexit, and 6 million younger people have joined the electoral or become voting age, right? So you've got more younger people, more replacements. You've got a higher replacement, and the people who are replacing the dead old people are much more likely to vote rejoin. So rejoin is, at least on paper, a popular proposal. So James McCleary MP says, maybe this will show Starmer that a customs union and closer relations with the EU is not only good for the economy, it's also popular. Labour needs to get their act together and fix our broken relationship with the EU before Farage and Reform break it once and for all. So there is going to be, I think, a demand for us to get closer to the EU in order to get economic benefits from it that would ameliorate, would even further improve those good signs that we're seeing there. But all those good signs can be seen in negative ways, as Andrew Neil has just shown. Ziz Maxim here says the European Commission is preparing the Industrial Accelerator Act, which should strengthen the bloc's production base and give impetus to the restart of heavy industry in the EU. The EU is launching a new Made in Europe strategy. It provides, and we're going to talk about this because the US is going to town on the Pentagon is having a go at Europe wanting to buy European weapons. So we'll talk about this in another video. But the EU is launching a new Made in Europe strategy, providing for deregulation, acceleration of the formation of a single market, attraction of investments and reduction of energy costs. We've also seen, by the way, record investments in stocks in the UK just happening recently. Like loads of money is coming into the EU because people are wanting to invest in the EU and not the US. So there's loads of really good signs. There are loads of really good signs for the EU. The goal is to increase the share of industry in the EU by 20% by 2035. Ukraine, as a future EU member, should also become a participant in the Industrial Recovery Programme and pay more attention to the development of this extremely important area. Now, the UK is going to be looking at this saying, hang on, they've got a really attractive looking policy to get European investment into EU entities and sectors and industries, and also the Made in Europe strategy to get people buying European stuff that's made in Europe. But that's going to be an EU thing. Made in Europe won't include the UK. How do we get a piece of that? So, there's going to be, I think, a lot of focus on how the Starmer government is interacting with the EU and getting closer to the EU for economic benefit, because we need it. There are some good figures today, but there are vulnerabilities and there is also fragility, and I think in the geopolitical world where we are all victim to oil and gas prices moving, energy prices moving, or wars, or the unreliability and unpredictability of Trump and his foreign policies. I think in the UK would benefit from having the security blanket of the EU. How does that look, and what do we do about that? Anyway, that's my analysis of what's going on. Let me know what you think. Am I being too positive for the UK government? I know there are going to be some people saying, yeah, but they've done this wrong, this wrong, this wrong. But actually, I think there was, if we go back to what Andrew Neil was saying here, if you look below here, she also inherited economic damage from your Brexit. So Andrew Neil, you can come out with all the criticism you like, but at a time when we were out of the EU, so this is a period where we're coming out of the EU formally. We had a vote in 2016, but it didn't really happen until 2020. Of course, you had a pandemic. It confuses matters, but you've got this big difference between the UK Consumer Prices Index and the G20 median. So everything was much more expensive for the UK, presumably because we weren't part of the single market and we didn't have the benefit of lower prices, lower wages, free movement of people, and all that kind of stuff that keeps your costs down. We didn't have that, and so you could argue that was a Brexit multiplier there, as we are much higher than our comparable people around us. And then I like this. I'm confused, Andrew Neil. When things get worse, it's all Labour's fault. But when things improve, it's despite the Labour government. You can fix 14 years of damage overnight, but there are encouraging signs of a turning point. So we need to be careful that, like, you know, how much of this is down to the Labour government anyway, this positive stuff, but almost also how much isn't, and how much, when it's bad, isn't Labour's fault, and how much is, and or any government, right? So it's, you're always using negative news to hit the government. Of course, you blame them for everything, but sometimes there are international variables that play a part, and sometimes domestic variables are outside of the control of the government. But anyway, Andrew Neil has his opinions, and some people, I think, actually going to town on 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 what Andrew Neil said. So the 2% in June 2024 was a blip which had nothing to do with the work of Green Card Sunak. So what this is kind of what I was saying, that if you're saying that the 2% was very low, you were handed really low, you inherited 2% inflation, I'd say that was record low. Like, that's just not, that was not to do with the Conservative government. That's to do with the pandemic and all sorts of stuff. Stop using it as some kind of God-given benchmark. It wasn't and still isn't. So that, I'm glad other people are pointing that out as well. But anyway, there will be two sides to every coin, of course, and it isn't all Labour doing brilliantly. But there's some positivity for the UK government at the moment, which I think is very welcome for them, and it's good news for us. Like, I would like our country to do well. Thank you very much, irrespective of my or your political beliefs. We as Brits, if you are British, you should be wanting the country to do well. And here are some good indicators for us. There are going to be challenges with artificial intelligence. There will be challenges with foreign policy, but let's hope there is some plan in place for any such eventualities. That's enough from me. Take care. Thank you very much. Toodle pips.